Call the regular council meeting for the corporation of the town of Cobalt to order on April 29th, 2025 at 6:30 p.m. Disclosure of pecuniary interest and general nature thereof. None. Okay. 3, public meetings. 3.1, planning application 2025-01, zoning bylaw amendment for 34 Cobalt Street pursuant to section 34 of the Planning Act. This evening, Jennifer Pye is our planner with TMSA. We're going to ask her to come up in case anybody has any questions. This evening, there's a public meeting scheduled for a zoning bylaw amendment application. I will briefly summarize the procedure to be utilized for the meeting. First, the town manager will advise of the purpose and effect of the bylaw associated with the application and provide additional information that is relevant to the application. Next, the town manager will then advise council as to when, how, and to whom notice of the public meeting was circulated for the proposed amendment being considered. The town manager will also summarize any correspondence on file and advise of the appeal procedures. From there, the public will have an opportunity to speak to the bylaw being considered through the mayor. After the public comments, the public meeting will be closed. Council has the ability to consider that bylaw at the end of tonight's council meeting. I now declare this meeting to be a public meeting pursuant to section 34 of the Planning Act to deal with the following proposed amendment. Application file number 2025-01, zoning bylaw amendment 34 Cobalt Street. Are there any declarations of pecuniary interest? Of the application.
By Matthew McCrone of X Lands, located on Plan M47NB, Part Lot 388, Part Lot 389, PCL 13004 SST, municipally known as 34 Cobalt Street in the town of Cobalt. The purpose of the application is to rezone the property from institutional to institutional with a site-specific exception to allow for the conversion of the former Cobalt United Church building into a fitness facility.
Would the town manager please describe how notice was provided?
Notice of the public meeting was provided by mailing a notice to all property owners within 120 meters, posting a sign on the property, posting on a town bulletin board, as well as a town social media. All notices were published at least 20 days prior to this evening's meeting. Included in the notice was an explanation of the purpose and effect and a key map showing the location of the property or a description of the lands. Of the Planning Act. Members of the public are advised at this point that unless they make an oral or written submission to council before council makes a decision on these applications, that any may be dismissed by the board. Anyone who wishes to be notified in writing of council's decision the proposed zoning bylaw amendment must submit a written request to the town manager. And there are no comments were received prior to tonight's public meeting.
Does any member of the public have comments or questions? Okay, there is no questions. And we don't need the planner to answer any questions, comments, or questions. Good, Angela?
Yep. Yep, thanks.
If there's no further questions, the bylaw for the zoning bylaw amendment. Sorry? try that again. If there are no further questions, the bylaw for the zoning bylaw amendment will be considered further into the council meeting for decision. And I hereby declare this public meeting closed. Thank you, Jennifer. Or deputations, delegations, or presentations. 4.1, Daniel Gerard, Kemp, Elliott, and Blair, presentation of the 2024 audit. Danielle, welcome. Hello. Draft motion. No, we need her to do her presentation first. Getting ahead of myself, I'm rushing you.
Organized. Okay, so everybody should have a package in their handout stuff that has some pages from your financial statements. So we will review basically some of the important pages that I think are relevant to council. Steve does have the full financials, which are almost 30 pages long now. But I think this is kind of the information that's more relevant to you. If you have any questions along the way, just interrupt me. The first page we're going to go through is actually page 22 in the right-hand corner.
The notes that are being provided for council will be put on the screen as well.
There you go. So this one actually is a note to the financial statements. And the reason it's a note, and you've probably heard me say this before, is that you're required to present your financial statements under PSAM, which is the Public Sector Accounting Board regulations for municipalities. And it doesn't line up with the way that you budget. So there's a disconnect between accountants and reality at the moment. And you don't budget the same way, and you can't change the way you budget because you still need to strike your tax rate. But the major difference is our capital assets, capital expenditures. So under PSAM, you have to capitalize and depreciate in your budget. A capital expense is a straight expense. So those are just some of the differences. Long-term debt is a little bit different as well too. So what we did is we took the PSAB one and we converted here to the way that you budget, so that when we're comparing it, you're comparing apples to apples. Makes a little bit more sense for you. So the middle column is the actual 2024, the budget for 2024 is on the left, and the actual 2023 is on the right. So this is the statement of operations, which shows the activities for the year. So under operating revenues, municipal taxation, 819,000. Your rate went up 15%, your assessment went up 0%, and that brought an extra revenue increase of 15%. Water and sewer user charges, 575,000. Your water went up 8% and your sewer rate stayed the same. Policing fees, 381,000, they increased by 4%. User charges, 194,000, that's everything else that you charge your ratepayers a fee for. Building permits were down 11,000, and then cemetery fees were up 5,000. Provincial grants, 1,169,000. Now your Ontario Municipal Partnership Fund is the largest grant in there. It's your unconditional grant from the province. It was 899,300 and had remained unchanged for the prior year. You also used OCIF funding for what's considered an operating expense, such as some manuals for the water systems, asset management plan, and that was 114,000. Nords, there were 75,000 that were related to roads, which was more of an operating type expense rather than a capital expense. And there was recycling grants for about 55,000. Federal grants, 77,451. You had 68,000 in gas tax, that again was used for more operating type things versus capital. A lot of these things were used for more water main break type expenditures that are considered more of a repair to the system than an actual upgrade. And then there was CHCI grant for 5,000 for walking trails. Revenue from other municipalities, 28,245. 25,000 of that was water charges. Investment income, about 22,868, about the same as last year. Penalties and interest on taxes, 56,000. You'll see in a minute that your taxes receivable is down quite a bit. Part of that is that you have some properties that vested, went through the tax registration process, they didn't sell, they vested back to the property, so the write-off of the taxes has decreased your receivables. Land sales, we have 3 properties that sold for a total of 53,500. And then other, 141,816, you had $60,000 worth of donations related to the library, the cemetery, recreation, and then certain ones that are considered flow through that you receive on behalf of an organization and disperse it out to a group. And then 62,000 of that related to amounts billed to DSAB for their COTEM, I call them COTEM units, I don't think that's what they're called now, but they're units at the Fraser building that they so total revenues were just over 3.5 million. We had some provincial grants of 146 in the capital. OCIF was used for valve replacement at the wetlands. No federal grants for capital. Other 10,000, there was a $10,000 donation towards the fire truck. And then long-term debt proceeds was 713,201, and that's for the fire truck and the new Ford 550. So total capital revenues, 869 for total revenues of just under 4.4 million. Under operating expenditures, general government, so everything that has to do with running the municipality itself, 717,000. Last year, you had some consulting fees for the asset retirement plan that you had to pay. So overall, your professional fees were down about 50,000. This year, you do have 37,000 in there that are write-off of taxes that you weren't able to collect because the properties had vested to your name. And then expenses for the Fraser building were actually up about 26,000 from the prior year. Protection to persons and property, 560,000. Your policing went up 17,000 and your building permits were down 10,000. Transportation services, everything that has to do with roads was at 701,000. Your roads materials were up about 18,000. You used your NORDs on about $75,000 worth of expenses that related to water main breaks and patching of the roads. Your transit was down, and the reason your transit was down is we did your financial statements really late last year because of those asset retirement obligations. So by the time we met with you, the town had received the reconciliation for the transit and the landfill from the city of Timiskaming Shores. But as of right now, those amounts have not been prepared, so we don't know what those are. So there could be an additional amount owing towards those two items. And I think last year you received them in the summer sometime. So there's a comparability issue when it comes to transit and the landfill, just because you don't know what those amounts are. So there could be an additional cost, or sometimes it's a refund. Well, usually the landfill, I think last year was a refund, but the transit was an additional. So those amounts are still unknown. So it made your landfill and your transit obviously be lower this year. Environmental services, 1,047,000. So the study of the wetlands, which is the assimilative study, is that what it's called? Yeah, I did not know that. That's 82,000. It's considered an operating expense because it's a study. But we'll see the detail of the water statement in a minute with the breakdown. Your chemicals were also up 11,000, and the landfill costs were up about 46,000 because after the issue so that amount could technically be down a bit. Health services, everything that has to do with health and cemeteries included in this column, 146,882. Your land ambulance was down 13,000, and if y'all remember, right before Christmas, the DSAB issued refunds. So the land ambulance portion of the DSAB is in the health line, so it went down due to those refunds that were issued. Social and family services, everything else that has to do with the DSAB, so social housing, child, children expenses, and general assistance, I think. That was 87,000, again, refund from DSAB is against that, so that's why it's down. Recreation and cultural services, 217,000. In that amount is the 71,000 paid to demo the museum. Planning and development, 13,451. You had an intern in the prior year for part of the year. So total expenditures just under 3.5 million. Capital expenditures, 867,000, which includes a valve at the wetlands, the new fire truck, a new columbarium, the Ford 550, and yeah, those are the main things there. Long-term debt repayment, 71,031. You have the loader, the F1, the 2020 F-150, the 2022 F-550, and the public works garage that you were paying back. There were no repayments for the fire truck yet. Those started in the new year. Total expenditures of 4.4 million, so if we take your total revenues less your total expenditures, you do end up with a deficit of 40,883. A little bit higher than you were budgeting. Now I'm gonna bust your bubble a little bit because there's, I don't wanna say a discrepancy, but you have two big pieces of debt that were taken on this year, one for the fire truck and the other one was for the F-550. And when you took on those loans, you included the rebatable portion of the HST. So the proceeds you received from your loans also covered the HST that you got back as a rebate. So on your financial statements where you see long-term debt proceeds under capital revenue, and that's 713,000, well, there's no corresponding expenditure for about $80,000 of that. So the amount that was overfunded was actually 87,000 between those two pieces of debt. So you took on more debt than you actually needed to cover the expenditure by 87,000. Because when you got the HST rebate, it didn't go against the loan. You still owe the same amount of loan. So you borrowed for the HST that you were gonna get back. Okay, so same thing had happened with the public works garage a couple years ago. And now the same thing happened with the fire truck and the F-550. So in theory, if it wasn't for that extra proceeds from the long-term debt, your deficit should be $87,000 worse than what it is now. So you're having extra revenue in there of 87,000. So it should actually be 128 would be your actual deficit, ignoring that, I don't want to say error, but irregularity that's making things look better than they actually are. Because now you still have that debt you need to pay back at some point, and that HST is on something else. But you're left with the debt to pay off. So
That's called fancy accounting.
it's very fancy. It makes it look really good on paper.
Not in the pocket.
Okay, so although it's a $40,000 deficit, it technically should be 128 if you were ignoring that piece of long-term debt that are bringing in an extra revenue that technically should not have been there. So you're basically extending that expenditure base throughout however years you're financing these items. Okay?
So it's like when we buy a car,
Yeah,
we finance the tax and everything,
yeah.
but we just don't get the rebate back.
Now you guys get the rebate, and when you're buying a $650,000 fire truck, the rebate is significant.
So should we be earmarking that rebate to go against debt?
Rebate is long gone. So you don't have a rebate to offset against anything. Just means you're now financing additional debt over and above the expenditure base that you actually incurred. So you've basically taken a problem of 87,000 and separated over the next 15, 20 years that you're financing these pieces of equipment over.
So would you recommend though that when we do get the rebate back, it should be applied against
You've
them?
already gotten it and you've already spent it. It's already gotten. So. All right, so that's what's making that look like. So in theory, you budgeted for 37.5 of a deficit, which was supposed to be used from your reserves, part of that being your columbarium, part of it being a donation towards the fire truck you had received last year. So that's what made up the 37.5 deficit you had in the prior year, if you look in your budget column. So instead, you technically end up with a deficit of 128 if we ignore the long-term debt discrepancy. So it was worse than you were expecting, if you want to say that, and that's with a 15% tax rate increase. So I don't want to be the budget killer, but that's the reality of the situation.
Slightly.
Are there any questions on that page? Because that's an important page for everybody to understand. Now, if you want to see the happy part of it, look at the 2023 deficit. You are much better than that.
There's a happy side to
That's
it.
the happy side.
Yeah, okay, sure.
There's an improvement there, okay? It's not all doom and gloom, so it's a little bit better.
Improve.
Any questions on any of that?
Um,
Angela? have any
looking at where we did spend money, I think we were pretty lean, but did you notice anything that you think, hey, they could have done better?
It's one of those things, you can't control a lot of your expenditures. If the amount it snows in 1 year is gonna throw your budget right off. So things that you weren't predicting will happen. Budgets are not set in stone. You only do your best guess at trying to figure out what's going to happen. Capital is expensive. Watch your capital, make sure that what you are doing, you are funding it one way or another. You're taking on quite a bit of long-term debt, but make sure you're budgeting properly for that long-term debt. It does need to be repaid. So it may solve a problem in year 1, but now you have a problem for year 2 to 20, or however long you're financing that debt. Now you have an added budget item that you didn't have before. So it solves the issue when you have large projects, but you've had 2 years with very large projects. So you have the public works garage and now you have the fire. And those were 2 very expensive things that you now have to figure out how to finance. So added lines in your budget, make sure you're budgeting properly. Cost of everything continues to go up. That's not going to change. You have, I don't want to call it crumbling infrastructure, but I'm sure everything under the roads is not in the best shape. And that's been an issue now for quite a few years. And I don't think that problem's going away. How do you predict what's that going to cost you every year? I have no idea. You can have a very good year, you can have a really bad year. The amount of snow you get impacts that. So if the lines freeze or bust, that kind of stuff, there's all kinds of factors there that you just can't predict. So at the end of the day, you try and do your best, but you do have to watch for anything that was not budgeted for to make sure that if you didn't budget for something, what's going to change? Are you cutting something else out, or how are you going to make that up? It's not going to go away.
That's actually a conversation we had during one of our budget meetings this year.
So the right conversations to have. That's the thing, a budget will change the following day. Right? You can't predict everything, but it should be a roadmap that guides you to the end one way or another. It just means that all of a sudden, when you have an unexpected something, okay, now what do we change? Right? How are we going to react to that so that you don't end up with $400,000 deficit like you did last year? So that's where you have to piece things together, unfortunately. Any other questions?
Anything else, Angela?
No, that's good, thanks.
Next page is page 4. So this is your statement of financial position. If you're used to commercial accounting, it's also your balance sheet. We did not convert this one. This is the one that's actually required by PSAB, Public Sector Accounting Board, that does get sent to the ministry. And it tells you where you are at a point in time. So on December 31st, you had 377 of cash in the bank. Your cash position remains good, but some of that is because of your deferred revenue. So deferred revenue, which is in the liabilities there, the second and third line, is cash you've received that's earmarked for an appropriate project down the road. Examples of that being OCIF, gas tax. They pre-give you the funds and you get to decide when you want to spend them. So they're in your bank account, making your cash position look healthy, but somewhere along the way you have to spend that on the appropriate project to be able to retain those funds. So that's why your cash is sitting at 377. But if you look at the 2 amounts in deferred revenue, below you have 194 and 125,000. Those combined are more than what you have in your balance in your account. So if you were to spend all of the money you received on grants tomorrow, you're broke. So that's what's keeping your bank account afloat. So it might look like you have 377,000, but that money is actually earmarked for something else. All right, so as you dwindle down your reserves, which we will look in a minute, that's where you're going to feel the crunch, is that bank balance is going to be a struggle, especially if you start spending gas tax, OCIF, NORDS, and you're not holding on to any of it. Where's that buffer going to come from? Because that's what's supporting your bank balance right now. Taxes receivable, 299,000. This is where we dropped significantly from last year, but we have quite a few properties that vested last year, so their tax balances owing got written off because they transferred to the town, and then I think we turned around and put them up for sale. Is that or about to, or I think that's kind of what your plan is. So by doing that, it reduces the amount of taxes receivable because you now have to absorb that cost. Cash receivable, 109,000, 57,000 of that was HST rebate. So you get the rebate after the end of the year for part of the year. So the last 6 months is at the end, is after the end of the year, and the first 6 months is before that. And that just hadn't come in yet. Accounts payable and accrued liabilities, 268,000. So those are people you owed various money to. It's regular accounts payable. So like policing is 2 months behind. So your November and December billings are in there because you receive them in January and February. You have payroll liabilities that end up being paid in the new year related to payroll deductions, paid pension, that kind of stuff is all in there. Our fees are in there, and then any other accounts that are received in January to February that related to December. Deferred revenue others, so that's 194, that's what we were talking about, so that's cash you receive that is earmarked for a future project. So the 194 is all OCIF funding, so that means you had a balance carry forward in OCIF of 194 that was available for your budget for 2025. So if you bought the cash, you're not gonna get more from that year, you'll get more in 2025 for a new year, but that's available for you to spend in the following year. It'll become a revenue in the year you budget and expense. For now, it sits as a liability. Deferred revenue obligatory reserve fund, it's a fancy word for gas tax, or I think it's called the Canada Building, Community Building, something. I will always refer to it probably as gas tax, because that's how we know it. But it's 125,490, and that's what you had available also for 2025. Asset retirement obligation, 650. So we had a discussion about this last year. We had a big exercise that had to get done about all of the remediation of certain of assets you have in the municipality that you'll have to deal with sometime in the future, but that future is unknown. Some of that could be asbestos in buildings, issues with pipes under the ground, that kind of stuff that may have a cost involved to remediate if ever disposed of and or renovated or that kind of stuff. It's not something you're gonna incur tomorrow, so it's not like you owe 650,000 tomorrow. It'll be obviously budgeted and planned in a future project. So if all of a sudden this building has asbestos in it and is part of that 650 remediation cost, if you decide you're gonna tear it down, you're obviously going to budget for the cost of that remediation and disposal of the asbestos at that time as part of your project. So it's not like it's going to be an additional cost at that point. It'll just make do as part of your project, and you will figure out the financing at that point. But you are required to carry this as a liability. It's an accounting standard that you have to follow, and everybody else in the province has been told to as well. So you will notice that number went down this year. That's because you got rid of one problem. So the museum building actually had a remediation cost attached to it. So by demolishing the museum building, when that building was taken away to landfill, you now have less future remediation costs. So. Municipal debt, $1.5 million. So it went from 900 to $1.5 million. So a jump based on the fire truck. So in there you have 605 owing for the fire truck. The loader is 140. The F-150 from 2020 still has 13,000 left on it, and the F-550, which is new to you this year, is 100,000, and the public works garage has 704,000 left to pay on it. So that makes up $1.5 million. So if we take your assets less your liabilities, you do end up with a net debt of just over 2 million, and that number was worsened by 634,000 this year by the incurrence of new debt and the deficit. Okay, so right now you're still heading into the wrong red direction. At some point we need to have things turn around and head towards the green. So that net debt position is your financial position. So it's where you start off 2025 with. We will look at that number again in a minute because there are a little bit of manipulation to that number. But remember the 2,015,000. The other numbers on that page, non-financial assets, tangible capital assets being the largest number of 15.5 million, is the original cost less the depreciation of all of the assets, roads, buildings, sewer pipes, that kind of stuff in the municipality. Not a very relevant number to you because it's based on historical cost. Your asset management plan should have a listing of your assets, their condition, when they need to be replaced, what they're going to cost in the year they need to be replaced in, and how you plan on financing it. So I would say don't worry too much about this number and concentrate more on your asset management plan. Any questions on that? Okay, so next page is page 16. So we're looking at note 13, which is called the accumulated surplus. So when I said a while ago, remember that 2,015,000, about 2/3 down the list there, you're going to see the 2,015,000. That's your net debt position. Right above it, we are going to subtract out or add back unfinanced asset retirement obligation and unfinanced debt. And why we do that is because you're not paying it all off tomorrow. It's going to be budgeted for in future budgets, and you're going to pay some of that over time, especially your debt. You're not paying the whole $1.5 million overnight. So if we back out those two things, right above that, the 197,504, everybody sees that? That's your financial position, ignoring debt and asset retirement obligations. That's your true financial position that you start off 2025 with. So that number is a positive, but it's quickly dwindling away. So that 197, lucky for you, 521 of that belongs to the sewer people. So they're keeping you afloat because you have a corresponding municipal deficit that corresponds against that. So right now, of the 197 you're sitting on, 521 of that belongs to the sewer. So you owe the sewer ratepayers that amount somewhere down the road. So in that, you also have a library reserve of 18,000, which belongs to the library itself. You have your general municipal deficit of 394,000, a library surplus of 19,163, a cemetery surplus of 3336, a sewer surplus of 521, and then a waterworks surplus of a whole $136, which we'll look at the water and the sewer more in detail in a minute. So that's what makes up your reserves and your surpluses. So what's keeping you afloat is the sewer system. All the fees you've collected throughout the sewer system is kind of keeping things afloat at the moment. Now, this is not extra money in your bank account. This is made up of all your assets, less your liabilities, a net number that make up these amounts. Does anybody have questions on that? So that 197 needs to go up. And that's where we're at a point now, is it's been continuing to decrease every year. And it's slowly, and if it gets into a negative, then we're in trouble, and it's slowly getting there. So. Everyone's good? Clear as mud? Angela, you're good? She's good, we got a thumbs up. Page 23 is waterworks. So now we're looking at the water system itself. So this one's having a little bit of a tougher time. So the sale of water, you increased your rates by 8% last year, so that did bump up the revenue, but as we all know, the sale of water is becoming very expensive. Coleman paid 24,000 for their usage. Interest charges on collections was about 12,610. Provincial grants operating OCIF, you used $9,500 to purchase some manuals. Federal grants operating 58,000, that was gas tax mostly used on water main breaks. Total revenues of 520,000, salaries and benefits 86,000, materials, supplies and utilities 283. The chemicals increased by about $11,000 from the year before. Contracted services 199,000. 84,000 of that related to break repairs. So your water main breaks continue to be a huge cost to the water system. Total expenditure is 570, so that gives you an annual deficit of 50,000. It pretty much wiped away whatever accumulated surplus you had, and you are left with a whole $136. Any questions on that? Now we'll look at a little ray of sunshine. Let's look at the sources. Next page 24. Note 19 is the sewer wetlands. Your sewer user fees, you've held it tight and did not increase the rate, so it stayed at 159,000. Interest charges on collections, 4,840. Provincial grants operating, 81,000. You used OCIF towards the assimilative study. Provincial grants capital, 146,000. There was the valve upgrade that you used OCIF for as well. So total revenues, 391,000. You had salaries and benefits of 65,000, some material supplies and utilities of 7,700, contracted services 156. The assimilative study is of 83,000 is in this number, and then the capital expenditures, which was the valve upgrade, was 148,000. So you do end up with an annual surplus of 12,000, and an accumulated surplus is up to 521,000. Any questions on that? That's good. Okay, so in your package, I forgot to give you guys a page for the library, but I thought it might be useful for you to understand how the library's financial statements look like. Because you do have to sign off on the library, because it is, you are the umbrella of the library, if you want to call it that. I don't want to say the wrong words of what you are, but that's pretty much how I describe it. So I do have an extra page here that shows the statement of operations for the library, because their financial statements are set up a little bit different than yours. And I thought it might be a good exercise to explain to you how they're set up, so that you understand a little bit what the library does and how it's functioning. So I'm going to pass these around, but you don't have these in your package. And I apologize on the oversight. I should have sent it ahead of time, but.
Councillor Hunter, Steve will send one by email to you. He's gonna take a picture of it now.
Thank you.
Thank you very much. Thank you.
I have to keep myself up on, I do have a picture. I'm taking long. Just gonna wait till Angela's got a copy. Just so she can follow along.
Trying to bring in someone who I think is Councillor Wilcox. So, you know. They keep declining coming in, so. She says that. Fair enough. Let's see what we can do. You just said that to me now? Yeah. Through email? Yeah.
I've received it. Thank you.
Oh, you have a copy? Okay. Okay, so the page that you have is a statement of operations for the library. So the kind of the confusion I think that happens with the library is that their statements don't necessarily get converted. We don't go through that whole process. I don't usually present them to anybody. Nobody ever asks me any questions. So we try to keep costs down and leave them the way that they're required to be presented under Public Sector Accounting Board. So I just wanted to show you what the actual true surplus or deficit is, so that if you are looking at it or somebody on the library board is looking at it, they might have a better understanding of how their financial statements are working. So this shows the revenues and expenses for the year, kind of like the same as yours. We've got provincial grants of $6,200. Last year they had some federal grants. This year we have some other grants of 46. A lot of that is the Smithson Foundation. They get the Cobalt Legacy Fund and they get a lot of those grants come through. The town of Cobalt, you would have contributed $16,523, which includes your operating grant that you would have granted them, plus expenditures related to the maintenance of building or any other expenditures you paid on their behalf. It would be included in that amount. Municipal contribution, Coleman gives you $2,000, and then the fees, donations, and fundraising activities gave them $6,663 for total revenues of $77,000. The expenditure line is where it starts to get a little bit tricky. So we've got wages and benefits of $37,000, professional fees of $11,000, and then amortization of $12,000. So their financial statements show depreciation on assets, which include mostly the building, which isn't a true cost to them. So we tend to convert the deficit by re-adding some of the amounts that are a little less relevant. And amortization is one of those. We then have books and subscriptions of $4,500, some utilities for $6,900, other supplies of $4,200, some insurance of $3,650, interest and penalties $27, maintenance and repairs of $633, and then accretion is the other bingo one in there. So accretion is the increase in the asset retirement obligation related to the building of the library. So the building for the library actually has a retirement obligation attached to it, and so as that obligation increases, there's an accretion expense that happens every year. And that's just for inflation, increase the liability with the inflation. So that gives them an annual deficit of $6,944. But that includes depreciation and it includes the accretion. But it doesn't include any capital expenditures. So what we do is you actually look at your deficit of $6,944. You should add back the amortization of $12,362, add back the accretion of $2,797, and then reduce it by its capital expenditures of $5,640. So that actually gives you a surplus of $2,575, and that's their true surplus. And the way to know what their true surplus is, there is a cheat sheet for anybody who was wondering, because you're probably going, huh? In that listing of reserves we were just looking at for your accumulated surplus, If you look at the library surplus, it changed in the year by 2575. So in the listing of the town's reserve balances, you will notice that the library surplus increased by 2575. And that's the same as the operating surplus they incurred if you ignore amortization, the accretion, and you back out the capital expenses. So that's why some of the library board members may find it very confusing as to when they're looking at their financial statements and not quite understanding what the true results are. Okay? Does that make sense to everyone? Everybody could explain it to them tomorrow if they had to. That's the test.
Nice try.
Okay, so financial statements can be misleading sometimes, and if you looked at your true financial statement and your statement of operation, you have the same thing. You have accretion expense in there, you have amortization expense in there, and you don't have capital expenditures. So that's the one that's required to the ministry, and it's the one that's required to be prepared using accounting standards for municipalities. So they could be quite misleading because they really don't line up with how you budget or how you make decisions, which can be very confusing. Okay, it's just for the town, we did the work for you. For the library, you have to do the work. So you have to look at the numbers and understand them a little bit better. Clear as mud? Does anybody have questions on that? Okay, so. Oh, I have a management letter to read. That's the last part of the package I missed. So we've now completed the 2024 audit and consolidated financial statements for the town of Cobalt. Financial statements show an operational deficit of 40,883. I think you guys will have a copy of this, right? Okay. Your net debt position continues to grow with the deficit and the additional long-term debt and is now up to $2,015,000. The two new pieces of long-term debt finance the HST rebate that you also received back as a refund. So 87,000 of the proceeds of long-term debt did not offset an expense, which attributed to your lower deficit. Without this additional debt, your deficit would have been 187,000 for the year. Last year's tax increase did help boost your operating revenues to cover your operating expenses and is a step in the right direction. Care must be taken to ensure balanced budgets in the future. So unfortunately, your woes are not going to be over that quickly, but you are moving to smaller deficits. Any questions on that? Okay, I have the rep letter to sign. I don't know if you want to do your motion before I sign the rep letter, or do you want to do that after? I'll leave it up to you.
I'm gonna do a motion and then sign the letter.
Sure.
Draft motion, be it resolved that council receives the 2024 financial statements for the corporation of the town of Cobalt and the Cobalt Public Library as presented by Kemp Elliott and Blair LLP, Chartered Professional Accountants. A mover and a seconder, Councillor LaFleur and Councillor Starchuk. Any further questions? All in favor? Carried.
Okay, so I'll pass the letters around. There's a letter for the library and a letter for financial statements for everybody to sign off, and there's 2 copies of each. So you need to sign 4 times.
Okay.
I do have some questions I do have to ask, and I'm required to ask. Does anybody have any concerns about fraud or financial propriety or anything related to the finances of the
Councillor Hunter? Okay.
I can see her no, she's doing really good with that. Does anybody know of any lawsuits or other claims against the municipality that is not covered by insurance that we should be made aware of? Or anything that's happened significantly since December 31st that you noted in your financial? Okay, I do have a quick meeting for next year's audit, just because we are required to meet with council prior to that. I did bring an engagement letter engaging us to be the auditors for next year. If everybody's comfortable with signing it tonight, I will pass it around.
Councillor Hunter? No? Okay.
Okay, so I'll pass these along this way.
Sounds good.
We haven't confirmed that by voice since I don't see any video.
I have no questions or concerns.
Counselor Wilcox, is that you?
That's me.
Thank you.
What's the date today?
The 29th of April. Does anybody have any questions or concerns about our audit process or what we do? Materiality. So we have to pick a materiality factor when we do the audit of the financial statements. Materiality is what we think the size of an error could impact a user's decision. So if your financial statements had an error in it of, say, we've used 42,000 as our amount. So if we think there's an accumulated error of 42,000 or more, we think that will impact your decision-making when you're looking at those financial statements. If it's less than that, we don't think it'll impact your decision-making. So it's considered not material, which means it's insignificant in the financial statements. Because we obviously can't fix and see every dollar, every penny that's going through there. So for example, if you were have received, say, the transit reconciliation last week, we'd have technically had to make an adjustment. But if it was under that 42,000, we technically don't necessarily need to because it's within our materiality range. So usually the only time we don't fix something is because it's either insignificant or the financial statements are already done and we wouldn't want to fix them at this point. But that's what we use a materiality factor for. And we also use it in our testing to make sure that we are looking at all amounts that are over that threshold. So we had determined for the town that 42,000 is actually the threshold that's appropriate for you. And that's based on a factor of your total revenues. Did anybody have areas they believe are higher risk where we should spend more audit time? Does anybody have knowledge of fraud or any concerns about possible fraud? Internal control discussion, I do discuss with council every year. You do not have a department of 15 in the accounting department for your town. So the onus is on council to ask questions, review reports. If you are the second signature on the checks, you are reviewing invoices and backup for those checks, who the checks are being made out to, the amounts, and that they're appropriate town expenditures. And that when you are reviewing reports, you are asking questions so that you are aware of everything that's going on. That's all I got. Any other questions, concerns? Yeah, that's four.
I just want to make sure.
Any other questions or concerns before I go? All right, thank you very much. Have a good night.
Thank you very much.
Thank you, Danielle. So thank you, Danielle. Okay, so we'll move along. 5, adoption of meeting agenda. Draft motion be it resolved the council approve the agenda of the regular meeting dated April 29th, 2025. As presented, I need a mover and a seconder. Councillor Starchuk and Councillor Lafleur and Councillor Hughes. Any errors, omissions? Okay, all in favor? Councillor Wilcox?
Yes.
Carried. 6, adoption of previous council minutes. Draft motion be it resolved that council approve the following minutes as presented. Regular meeting of council, April 1st, 2025. A mover and a seconder. Councillor Starchuk, Councillor Lafleur. Any errors, omissions? Okay, all in favor? Councillor Wilcox?
Yes.
Carried. 7, staff reports. Draft motion be it resolved the council accept the staff reports as presented. I need a mover and a seconder. Councillor Lafleur. Councillor Starchuk. 7.1 bylaw enforcement report, March 2025. Any clarification required? All right, 7.2, Canada Day preparations. Yes, please.
Just to let everyone know that we put in an application back in 2024 for this year's Canada Day, as we do every year. This year, we got a grant in the amount of $1,670, up from the $1,300 from last year. So this will be going towards Canada Day activities.
Should I speak in place of Pat? since she's not here? The committee's hard at work. They're developing some new things for this year. And one of them is we are going to distribute rules for the parade, just so that everybody's aware. It's basically a housekeeping issue, so that we don't run into any issues. We kind of ran into a couple of small ones last year, so before they grow into bigger ones. And yeah, I'm pretty excited to see what they come up with this year. Okay.
Right.
Staff report 2025-04-29-01, 2017 trackless MT7.
Speaking with Public Works, actually over the last few years, they have requested a newer trackless. Our older trackless, we have two of them. The older one is 1991 with 1984 and 1987 parts. So you can just imagine the shape this is in right now. And when you start looking at cost for repairs, it adds up very quickly. So I was speaking with Public Works, and we did tender out just to see how much a brand new trackless would be. A brand new trackless runs for $176,000 at this time. Option B is what they call a conversion. They take an existing trackless, put all brand new 2025 parts in, and that runs for $152,000. So myself and Public Works, we were looking online, and we came across a 2017 trackless MT7 with approximately, let's just double check here, only 1,600 hours of use. It comes with a blade, it comes with a salter, a sweeper, a water tank, and a finishing mower. And looking at the cost of this, it's really only $45,000. We put a request in later for 50. That's with taxes and that as well. But this would be, if you're looking long term, it would last the town at least 20 years, and saving compared 176,000 or 152,000 to 50,000 is actually, I find it kind of a no-brainer, especially the financial situation that we are in at this time, and realizing pieces of equipment, because right now that older trackless, the frame of it is going on it. And like I said, at what point do we stop putting repairs into something that is going to cost us more repairs in the long run?
No. Can I ask a question?
Yeah, go ahead, Councillor Hunter.
Do you know, like, I don't know how much models change from year to year. Would our current track list be good at all for parts for this one? Like, do things like our broom or sweeper, like, would they also mount onto this one so we could use it as a backup?
Actually, it is interchangeable. That's the beauty of this. We're dealing with just trackless itself. So the piece of equipment or the parts would go hand in hand.
Nice.
But that being said, I would sell that older one, the 1991 with the 84 and 87 parts, try and get any money that we can get for it and put it towards this one here.
Which still leaves us with two trackless.
Yeah, we would still be using the sweeper. We would not sell the sweeper or any of those other parts with it. Yeah, it would be just the trackless as is.
let them buy their own equipment.
Exactly.
Any other questions? Counselor Hughes?
And then would we take the one that we're using now and kind of put it to summer duty? Just sweep
Yes,
it?
for the wear and tear, especially with the summer on it. I did look at some financial costs on this as well. So, staff and I looked at, if we loan balance up to say 50,000, and if we get it over a 5-year period at an interest rate of 5.45%, we'd be paying $953.90 every month. If we want to do it over 4 years, we'd be paying $1,161.68 a month. But again, this bring to council first, and then also with the budget committee to put these costs in.
And that interest rate has been quoted?
Yeah, well, it is at 5.5.
And if we shorten the loan to 48 months, it shortens, reduces our interest.
Yes. Just looking at it over time right now.
It's not a big difference, shorting the interest. That's 2,000.
Oh.
Counselor Wilcox?
Oh, yes, thank you. I think that's a good track list for the price. I think that would be fine. My question would be, looking at what we're going to pay monthly, is what do we have? Is the loan on the loader going to be up shortly, or something else like that? Because we got to be a little bit concerned with spending.
The loader itself is still going.
Until
Yeah, the truck is done next summer. The older one there that we have by the F-150. Yeah. So. But this will be brought in with these costs there into, like I said, council. And into the budget there as well to look at. So. That is why I'm trying to put it over a 5-year period at least to offset some of the costs here. Because the cost of repairs are coming up. In the last few years, we spent over $10,000 in repairs.
Is the loan, is that going to be locked in as far as for interest payments? It's going to be
That's
locked
what
into
we're
a certain
for,
point.
is locked
For
in,
5
right?
years.
Yeah. But before moving forward with making that, I need council's approval first.
Okay.
Move forward with
Well,
this.
that's yeah. Let's have our own cap.
Thing, Your Worship, I will not be bringing this to council's attention because I do realize the financial situation we are in. If it wasn't important, like I said, this has been brought to the budget committee over the last few years and always been kind of a priority for public works on their behalf.
The difference in payment is only $207 a month between a 4-year and a 5-year.
And that saves 17 or 18 in interest.
That's it.
1,800.
Doesn't really matter in the interest.
Okay.
Okay.
Any other questions? Okay. Staff report 7.4, 7.4 staff report, 2025-04-2902, zoning bylaw amendment, planning application 2025-01. Report there. Does anybody require any further clarification? Okay. 7.5 staff report 2025-04-2903, bylaw 2025-10, hiring bylaw. Yeah.
So back, for the recommendations of council at the regular council meeting back on April 1st, staff made the following changes to the draft bylaw. Expanded on the reference checks. In addition to part 7, in which no changes have been made, staff has amended the following sections to include the steps taken for reference checks. Part 4, hiring of town manager, section 5. as well as part 5 hiring and management / non-union positions, section 5. Also, part 5 hiring of management non-union positions, section 3 was also updated to include a breakdown of the hiring committee, as well as part 6 hiring of union employees, expanded to also include the hiring process. So again, there is no financial implications on the 2025 budget from the consideration of this report.
Any questions, clarifications? Okay. All in favor? Councillor Wilcox?
Well, my only concern, of course, is still with the hiring of department heads, and I would still like to see council involved in that.
Okay,
I
this
know,
is just accepting the reports, the staff reports.
I'm sorry?
This is just to accept staff reports at this time.
Oh, okay.
So in favor, against, or abstaining? Oh, carry. 8 items for council consideration. 8.1 Northeastern Public Health Proclamation, Mental Health Week, May 5th to 11th. Draft motion. Whereas all people have an equal right to the highest attainable standard of mental well-being, which is inseparable from their right to social protection, an adequate standard of living, and freedom from discrimination. And whereas 1 in 5 Canadians experience mental health illness or mental health issues in any given year, but 5 in 5 of us have mental health. And whereas government, Indigenous leadership, health authorities, businesses, and community organizations have a shared opportunity to improve the lives and health of people living in Ontario by providing the basic supports that lay the foundation for mental health well-being and delivering the services that enable recovery and provide the opportunity for all people to thrive. And whereas the Northeast Mental Health Committee calls for the public to become informed about mental health and to focus collective efforts on the protective factors that enable people to achieve their highest standard of mental well-being. These include initiatives that range from poverty reduction, stable and affordable housing, attainable education, to wraparound health services. And whereas Mental Health Week provides a unique opportunity to affirm our shared commitment to building public awareness of the importance of mental well-being. And whereas the Northeast Mental Health Week Committee has collaborated among its members, Northeastern Ontario Family and Child Services, Canadian Mental Health Association Cochrane, Timiskaming, Northeastern Public Health, District School Board of Ontario Northeast, Northeastern District Catholic School Board, Pensier, Scolier District, the Grand Rivier, Conseil, I'm gonna have to try and do this beforehand. The Scolier Public, the Northeast, Coonawanna, Mano Child and Family Services, Mushkegowuk Council,
Okay, go on.
Mishway Community Health Center to host many activities and initiatives this year in committees across the districts of Cochrane and Timiskaming to help raise awareness and educate the public on the importance of social connection and bolstering mental well-being. Now therefore, I, Angela Adsett, Mayor of the Corporation of the Town of Cobalt, do hereby proclaim the week of May 5th to May 11th, 2025 as Mental Health Week in the Corporation of the Town of Cobalt. I need a mover and a seconder. Councillor Lafleur and Councillor Starchuk. Any discussion? I'd like to start off by apologizing for my mispronunciation. Okay, all in favor?
Yep.
Okay, carried. 8.2 Moose Hide Campaign Day. Prevent Intimate Partner Violence, IPV proclamation, May 15th, 2025. Draft motion, whereas the Moose Hide Campaign is an Indigenous-led grassroots movement of men, boys, and all Canadians standing up to end violence against women, children, and all those along the gender continuum. And whereas the Moose Hide Campaign was founded along the Highway of Tears in British Columbia in response to the injustices and violence faced by many women and children in Canada, particularly those who are Indigenous. Whereas intimate partner violence is at epidemic proportions across Canada, with more than 4 in 10 women having experienced it in their lifetime. And this reality is worse for Indigenous women, who are twice as likely to experience violence from their current or former partners. Whereas the Moose Hide Campaign has distributed over 6 million moose hide pins that each spark 5 conversations about issues of violence against women and children and all those along the gender continuum. Whereas wearing the moose hide pin demonstrates a commitment to honor, respect, and protect the women and children in your life, end gender-based violence, and take meaningful action towards reconciliation with Indigenous peoples. Whereas participation in the Moose Hide Campaign is a concrete action for all citizens to address the legacies of colonization, residential schools, and the reality of more than 1,200 missing or murdered women in Canada. And whereas engagement with the Moose Hide Campaign aligns with the United Nations Declaration on the Right of Indigenous People, the Truth and Reconciliation Commission's call to action, and the calls for justice of the National Inquiry into Missing and Murdered Indigenous Women and Girls. Now, therefore, I, Angela Adshead, Mayor of the Corporation of the Town of Cobalt, do hereby proclaim May 15th, 2025 as Moose Hide Campaign Day in the Corporation of the Town of Cobalt. A mover and a seconder. Councillor Starchuk and Councillor LaFleur, any discussion? I'll start it off by saying that we have ordered some pins. They're provided free of charge. So there will be some available at the office. Everyone will be wearing one. 8.3, opposition to strong mayor designation for the Corporation of the Town of Cobalt. Oh, sorry. All in favor of 8.2?
Yes.
Terry, sorry, I got ahead of myself. 8.3, opposition to strong mayor designation for the Corporation of the Town of Cobalt. Draft motion, whereas the province of Ontario has proposed to designate the Corporation of the Town of Cobalt as a strong mayor community, granting enhanced powers to the mayor effective May 1st, 2025. And whereas the strong mayor powers significantly alter the balance of governance at the municipal level, undermining the role of council in decision-making, and weakening the fundamental democratic principle of majority rule. And whereas the Corporation of the Town of Cobalt has a long history of collaboration, transparent, and accountable local governments built upon a foundation of council debate and shared decision-making. And whereas many municipal elected officials across the province and members of the public have expressed significant concern regarding the imposition of these powers. And whereas the Corporation of the Town of Cobalt did not formally request or express a desire to be designated under the strong mayor framework. And whereas a growing number of municipalities and elected officials across Ontario are questioning the appropriateness of a strong mayor system and are calling for its reconsideration or repeal. Therefore, be it resolved that the Corporation of the Town of Cobalt formally requests the Premier of Ontario and the Minister of Municipal Affairs and Housing immediately remove the Corporation of the Town of Cobalt from the list of municipalities designated under the strong mayor legislation. And be it further resolved that a copy of this resolution be sent to the Premier of Ontario, the Minister of Municipal Affairs and Housing, and all regional members of provincial parliament and all Ontario municipalities and the Association of Municipalities of Ontario for their awareness and support. Mover and a seconder. Councillor Lafleur. Councillor Starcheck. Discussion. I'll start off. I requested that this be added to our agenda because I'm strongly against strong mayors. I feel that it sets up a municipality for a lot of unexpected costs and litigation because not every mayor is aware of employment laws. This act will allow mayors to dismiss any member of staff, which could be quite significant in awards and lawsuits. As well as I do firmly believe it undermines the structure of council and the role of council because the mayor has the right to veto any motion. And I don't believe that that's what our municipal level politics are all about. It's about representing our ratepayers and having a voice around the table with 7 people or however many that's involved in council. Does anybody else have any questions or have any comments?
No, thank you for that clarification. I wasn't sure.
Is there a list of these extra powers that? Is there like a
Yeah,
list
you
of
can
them?
find it online.
Yeah, okay.
Yeah. Yep. So,
Strange for them just to randomly pick communities.
anybody else? Councillor Hunter, Councillor Wilcox?
Nope, I'm good. I approve.
Oh, just to further, I did send feedback to the minister the same day they emailed this out. Telling them that why I was opposed to it.
Mhm.
All in favor?
Yes.
Carried. 8.4, 2017 trackless MT7 related to the staff report 2025-04-2901. Draft motion, whereas council received staff report 2025-04-2901 with the recommendation to purchase a 2017 trackless MT7. Now therefore be it resolved that council approve the purchase of the 2017 trackless MT7 in the amount of approximately 50,000, including taxes, license, and delivery. Mover and a seconder.
Oh, can we
Council-
just, oh, sorry.
Councillor Lafleur. Councillor Hughes. Okay, discussion.
Me,
Councillor Hunter.
thank you. I mean, you've seen it online. I'm guessing you've talked to the people selling it. Is there some sort of like a mechanics report or something just to make sure that it's not too good to be true, and when we get it, it has another $75,000 worth of work required?
I have spoken with the owner of the his equipment. He was continually using it in the Ottawa area. Say there was no issues at all. I've been in communication, as well as our public works department has been in communication with the individual as well, discussing this and discussing any issues at all. At this time, unaware of anything, but again, before any purchases, there will be to look it over for sure, to make sure.
Investigated first.
Yeah. It's coming from actually an elderly gentleman who's retiring and closing up his business.
That sounds great.
Yeah.
Any other questions? Councillor Wilcox, anything?
Nope, I'm good with it. Thank you.
All in favor?
Yes.
Carried. I know it's after the fact, but I have one question. So any HST rebate we get on this, can we apply it towards the loan?
Yes.
Right.
Will you get HST off this on a private sale?
We'll have to go through department channels, but
We're done.
9, items for council information. Draft motion, be it resolved that council accept the items for council information as presented. A mover and a seconder. Councillor Lafleur. Councillor Hughes. 9.1 animal bylaw discussion, staff report 2025-04-29-04 animal bylaw. I asked staff to include this with some of the recommended changes to the animal control bylaw that have been highlighted to date. So anybody have anything that they would like to add?
Your worship.
What?
Actually, I have met and well, also staff has met with the animal control bylaw officer back on April 9th. And to get some input too of some of the challenges that they encounter. And looking at other municipal bylaws as well. One that came in particular with the issues that municipalities are facing more and more are the exotic animals. So came across one from Espanola where they have a bylaw to regulate the keeping and feeding of animals other than dogs and cats. And it goes into quite detail of what exotic animals are, and it includes again gorillas, monkeys, seals. Some of the ones you wouldn't even think of are in here as well. Alligators, crocodiles. Like, there seems to be just an issue going on more and more in all municipalities. So this one here would like to include some information and update our bylaw with that. Other bylaws that came to our attention were actually the town of Englehart, which just updated theirs in 2023, and also the city of Oshawa. And also the bylaw officer will be here at our next regular meeting on May 27th to speak with council.
Does anybody have anything they'd like to add?
The animal bylaw, that's the same tonight.
Yes, please.
Councilor Wilcox?
Oh, thank you. Just a couple of points. One, I saw the Oshawa bylaw, and they included a good description of what structures should be for outdoor dog houses, that kind of thing. And I would really like to see that included, in part so that the people who are enforcing these things can refer to it in front of a homeowner and say, no, you have to build it properly for the size of the animal. So I think some kind of an outline on that would be very good. The other thing that I have a little bit of trouble with is 821B. It says all refuse and waste matter from any rabbit hutch is disposed of daily in a proper and sanitary manner, and no such refuse or waste matter is burned or stored. My concern is, and because I have a rabbit, probably I might have some insight. There is a thing called, and I'm going to try and pronounce this correctly, caprophagy. It's what rabbits do to maintain digestive health. Basically, when they poop, they have three kinds of poop that comes out. One is very hard pellet. One is a pretty thoroughly black color. And rabbits re-eat the black colored one because it is not thoroughly digested vegetable matter in it. And by eating it again, they get the full nutrition from the vegetation they've been eating. The other thing, of course, is that it provides hind gut fermentation, which is very, very important, again, to maintain their health. So I'm questioning doing it every day. The standard norm that I found on Googling is 2 to 4 days. So I wonder if we might have somebody have a look at that and see if we could change that.
Okay, anybody else?
I was gonna add that's the same rule of chicken coops too. It was the same wording that was in for chicken coops. You can't store that. You have to get rid of it on a daily basis. How would you do that? You can't just throw it out. I mean, the garbage doesn't come every day. Like, I don't know how kind of unrealistic it to me, but
Maybe just clean the thing up in the garbage.
you're not allowed to store it.
Well, I think from,
Daily. You have to get
yeah,
rid of
you
this.
can't go in, it's not supposed to go in your regular
This
garbage.
doesn't seem realistic to me, but
It's different.
And again, if the public has any suggestions, they're more than welcome to send them into the town office.
Yep.
So. Okay. One more step in updating our bylaw. Okay. And let me go back to my agenda. Okay, all in favor? Councillor Wilcox?
Well, I don't think I heard an agreement on my point about the cartography, so I'm going to be opposed if that doesn't get corrected. It's about the
Well,
health of the rabbit.
He made a note to discuss that change. This is, right now, this is just a preliminary step.
Okay, as long as I thought I heard something different from another councillor. I could be mistaken.
Yeah, no animal bylaw discussion. That's all it is.
Yes, because the lady's coming on the 27th of May to discuss this again, correct?
Yes.
Yeah.
Yes. Okay, so Carrie. 10, bylaws and agreements, 10.1, bylaw 2025-13, zoning bylaw amendment number 3 for 34 Cobalt Street related to staff report 2025-04-2902, planning application 2025-01. Draft motion, whereas the corporation of the town of Cobalt has received planning application 2025-01 to adopt amendment number 3 to zoning bylaw 2022-24 for 34 Cobalt Street. And whereas authority is provided pursuant to section 34 of the Planning Act, RSO 1990 CP 13 to pass this bylaw. And whereas Council of the Town of Cobalt held a public meeting in accordance with the requirements of section 34 of the Planning Act. And whereas council received staff report 2025-04-2902 with the recommendation to adopt bylaw 2025-13. Now therefore be it resolved that bylaw 2025-13 being a bylaw to adopt amendment number 3 to zoning bylaw 2022-24 to allow for a site-specific exception to the institutional zoning of the property to allow for the conversion of the former Cobalt United Church building into a fitness facility on the property be taken as read a first, second, and third time, and finally passed this 29th day of April 2025. And further that the said bylaw be signed and sealed by the mayor and clerk. The mover and the seconder, Councillor Hughes and Councillor Lafleur. Any discussion?
Yes.
Councillor Wilcox.
I don't want to slow this up by any means, and let's get it passed and let the gentleman get on with establishing his business. But when I look at our zoning bylaw, page 18, that institutional zone is a very large bit of property down there. And I suppose that may have stemmed from when we had a United Church and a Baptist church on the same side there. But, you know, this one goes across Grandview, includes 3 or 4 residences there. And I'm just wondering why we didn't just do in the institutional zoning entirely. Just curious.
Was it brought up during the zoning the planning zone? So yeah. So that passed as institutional. So now it's a matter of if it needs to be anything else, we'll have to apply for an amendment.
I would think a simple amendment to get rid of that zoning and make it R1 or R3 or whatever else that's in the area would have prevented having to do further amendments. You could probably just do it with a application for a minor variance.
That's a discussion that maybe we should have at another meeting because it's not, I'm hearing from staff, it's not as easy as that. Anything else?
Nope.
Okay, all in favor?
Yep.
Carried. 10.2, 10.2 bylaw 2025-10 to adopt a recruitment, selection and hiring policy for the town of Cobalt related to staff report 2025-04-2903. Draft motion, whereas section 270 of the Municipal Act 2001, SO 2001, C25 as amended states that a municipality shall adopt and maintain policies with respect to the hiring of employees. And whereas at the special meeting of council on February 12th, 2025, council for the town of Cobalt directed staff to bring forward a new hiring bylaw. And whereas council for the town of Cobalt reviewed staff report 2025-04-2903, now therefore be it resolved that the council of the corporation of the town of Cobalt adopts a recruitment, selection and hiring policy for the town of Cobalt. Taken as read a third and finally passed this 29th day of April 2025. A mover and a seconder. Councillor Lafleur. Councillor Hughes. Any discussion?
Yep.
Councillor Wilcox.
Thank you. Again, I will reiterate my point that I think council should be at least attending any hiring of department heads. I think it's part of our duty under stewardship. And I note, although we had a legal opinion that suggested the Municipal Act does not cover us under any liabilities if we are acting in that area, because the Municipal Act doesn't give us specific permission to do that. We do by default act as hiring the town manager, a CAO, or whatever. That falls to council. So in that role, I guess we don't have the protection either. But I do think it's a very serious matter, and we should be there to make sure it is done according to oil. Thank you.
Yeah.
Just a little question about that, a statement about that. I think councils are here for 4 years. So if we're gonna hire somebody, and I'm at year 3, 10 months. Do I really care about the next guy? So why would a council be in charge of that? Because we come and go. That guy's gonna be here for 20 years. We're here for 4, maybe 8, who knows? I don't think our council needs to be hiring anyone less than the CAO. And that's, we hired the CAO, so we have faith in him that he can hire the right department heads and employees.
Okay, well, I can't debate this, but I do have something to say. So Councillor Hughes, would you take the chair so I can step down from head of council?
And I use to hit the gavel.
I'll go sit over here. Councillor LaFleur.
I like it.
Okay, Councillor Wilcox, I respectfully disagree with your point of view. The reason council hires the CAO or town manager is that person directly reports to council and is council's employee. The rest of the staff within a municipality is not council's employee, nor is council to have any part directing that person's work or employment. That's why it's not within our purview as a council. As a council, our purview or our responsibility is to develop procedure and policy. It is not to get into the day-to-day operations of the town. Whereas every employee underneath the CAO/town manager is day-to-day operations of the town. Okay, was that it? Anybody?
Any other discussion?
Yes, just to mention that respectfully, I entirely disagree with your comment.
Okay, can I take the headset?
Yeah.
Unless you want to call for the vote?
We get a vote? I don't know which one. All in favor? Is
Are
everybody-
you voting?
Yeah? Is Angela?
Angela, you voted? Yes.
All right, 5-1, 5-1, eh?
Councillor Wilcox says vote.
He's against it. Do you want to make it official, Doug?
I'd like to make it a recorded vote, please.
That's all right. Yes, please. I was feeling the power though, just surging.
Feeling the power.
Thank you, Councillor Hughes. Councillor Wilcox,
Opposed.
Councillor Anderson is absent. Councillor Lafleur,
For
Councillor Hughes, Councillor Hunter,
Four.
Councillor Starchuck. And I am for. One opposed. 5 for, and 1 absent. Passed, carried. Eleven, unfinished business, there is none. 12, new business. 12.1, schedule of accounts. Draft motion, be it resolved that council receives the following schedules as presented. Schedule number 2025-06 in the amount of $223,281.03. Schedule number 2025-07 in the amount of $5,664.47. A mover and a seconder. Councillor Lafleur and Councillor Hughes. Okay, any clarification? Okay, all in favor?
Yep.
Councillor Wilcox?
Yep.
Carried. Okay, carried. 13, mayor's report. I'd just like to remind all the residents, now's the time of year to start applying for your burning permits. There should be no burning. The permit beginning right now. Okay. Yeah. And I think that's all I have right now. 14, closed meeting, draft motion, be it resolved that council convene in closed session as per section 239 in Municipal Act 2001 as amended in order to address a matter pertaining to subsection 2A, security of the property of the municipality or local board. Mover and a seconder. Councillor Lafleur. Councillor Hughes. All in favor? Carried. Just a reminder to the public, we will be resuming the video recording after we come out of closed.